Hello, in this presentation we will create an invoice with inventory into QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks dashboard. We will be continuing with the Get Great Guitars problem. We entered an invoice prior to this presentation, and this will be the second invoice we will be entering with inventory. In order to enter an invoice, there's a couple places we can go. Last time we took a look at the inventory by going to the sales item here and then going to invoices up top and then finding the new invoice. This time let's go into the invoice by first going to this plus icon up top just to have something different. This will be the drop down customer, vendor, and employees, giving us the major type of data input forms that can be used in those categories. We of course will be in the customer category because we will be invoicing a customer, and we'll choose the invoice option. So we're going to have the invoice. Remember that an invoice is going to be used when we are not receiving payment at the same point in time. An invoice for QuickBooks in essence means we're going to increase accounts receivable, that account representing people owing us money. So we're going to increase accounts receivable, we're going to increase revenue, and we're also going to have, if we sell inventory, to decrease the amount of inventory and to record the cost of goods sold related to this. We'll talk more about that as we enter this and then look at what the effects of this invoice will be on the financial statements, balance sheet, and income statement. So we're just going to tab through this. Remember that the data input is really pretty basic for an invoice. That's the point of QuickBooks, having the data input to be pretty easy to do. It's a little bit more difficult really to think about what QuickBooks is doing in order to understand how the system's working. So we'll go through both here. We're going to go through the data input. We're going to start off with the customer. We select the drop down, we can see the customers here. If we type in the customer, it'll start to autofill. We're looking for Jones Guitar. There's Jones Guitar there. We're going to select Jones Guitar. And then we'll tab through this. So we're going to tab through. This is the email. I'm not going to enter an email. If you have the email, that would be great. And you can actually send directly with the email linked here. If not, then we'll print it and we can email it outside and or send it by mail or print it and give it to them in some other way. So then we're going to have the address. Now, note that the billing address over here is going to be really important once again because we want to calculate sales tax, and the new system with the auto sales tax calculation requires that we have either our address and or the billing address in such a way that we will be able to calculate the sales tax. If we don't have that, it's not going to be able to calculate the sales tax. So typically to create an invoice, you don't even need the billing address. But in order to generate that sales tax item, we do. I'm going to use just the same address for all of the invoices because I know it'll calculate how I want it to calculate just for an example. So it's going to be this address. Again, you need something there in order to have it calculate through what the sales tax should be. We're going to go through the terms then. Terms net 30. The invoice date. The invoice date is going to be 01/12/21. So net 30. Let's say net 30. I'm going to choose this one. And then the invoice date 01 and we're going to say 12/21. And then it'll give us the ending date to 11/21, 30 days later. Then I'm not going to put any different thing into the shipping. We're going to go down to the product item then. These are going to be from the inventory items. So remember, we need to have the inventory items set up in order to be able to just populate this from the inventory items. We could do so by the drop down. These are going to be for us guitars. These are going to be types of guitars that we have on in the store. So we're going to type in GUS. That'll auto-populate. This is the one we want. There we go. It's selected. We have that. The description is going to be showing up automatically. If we scroll through the rest of this, we have one of these. The rate is going to be 380. The amount 380, and we do have sales tax. If we click off of here, then on some other line, it'll calculate the sales tax for us. Remember, if this doesn't populate there, the sales tax doesn't calculate, It's probably because one, we haven't set up the sales tax, which means we have to add the state or that we have the sales tax in the sales tax preparation. And then we need to make sure that we have the proper address in our own address and the billing address to allow QuickBooks to calculate. Now, I'm also going to change this number because we're going to make it an even 5% just for an example problem. So all of our invoices is going to be an even 5%. And therefore, and remember, sales tax will be, as long as we know the percent, the calculation will be much the same. Meaning, we'll take the sales price, this is the sticker price on our case, the guitar, the inventory item, the guitar, and then we're going to just take 5% for the sales tax. So we're going to take 380 times 5% or 0.05, and that'll give us in this case, $19. So I'm going to change this item to $19. And that'll be the sales tax we will be using. QuickBooks is going to say, hey, that doesn't look like the sales tax we calculated. We're going to say, yes, we want to keep it. And I'm just going to tell them it's a practice problem. And that's why we're doing it. So if we take a quick recap of what is happening here, then remember that we're going to look at the financial statements and see what is going to happen once we generate this invoice. We know that it is an invoice, and then therefore accounts receivable is going to go up. It's going to go up by the entire balance of $399, representing people owing us money. We know that revenue also is going to go up. However, revenue or sales revenue in this case, because we're selling inventory, is only going to go up by the $380, the sticker price of the guitar. The difference, of course, is $19, the sales tax. That's going to increase not an income statement account, but a liability account, that being sales tax payable. Then we also have the fact that inventory is going down, and there's a cost of goods sold, an expense related to us selling that guitar. We didn't really earn $380. We earned $380 minus the cost of the guitar. We don't know the cost of the guitar. This is only the sales price, but the system knows it, and we'll see it when we go through and take a look at the financial statements. So we're going to go ahead and print this now. So we'll say print preview. We want to print or preview. And here is our item. We're going to go ahead and save this. So I'm going to print this item, or just download. Let's go up here. Let's download this item. And there it is. And we're going to say it's going to be an invoice. I'm going to give it the date first, which is 01/12/21. Then we'll say it's an invoice for Jones Guitars. And we will save that and close that. Now let's take a look at the financials and see what happens to the financials. So we're going to close this out, Xing out of this item. We will then go to the reports on the left-hand side. We're going to bounce back and forth a bit between the balance sheet and income statement, starting with the balance sheet. So I'm going to type in balance sheet here. We're going to go to the balance sheet item and take a look at the balance sheet. We're going to put the date up here. It's going to be 01/01/21 to 01/31/21, and then run that report. So here we have it. Now we're going to go through here. The invoice means that it's going to be a receivable. So we know that receivables is going to be affected. So we'll select the receivables item. And we see the invoice here. So this is the Jones invoice. It has the $399. If we click on that, we can auto zoom down, and we see that invoice, the $399 being the total amount here. Now the other side of this, typically when we think about just recording a journal entry, I'm going to go back, I'm Xing out of that and going back to the report, is typically the sales or revenue account. That would be on the profit and loss statement. So let's take a look at that. We're going to go to reports over here, and we're going to select the profit and loss. So we'll type in profit and loss statement. Change the dates from 01/01/21 to 01/31/21, and then we'll run the report. So for the month of January and the year we're working in, 2021, we have the sales of product income. That's going to be the sales items. That's the default. We're going to select that item, 790. And there we have our two invoices. This one was for Jones Guitar, 380. If we select that item, then we have the 380. Note that's this amount, the sticker price, not the full amount, including sales tax. The difference of sales tax, $19. Where would that go? We don't get to keep that, it's a liability. So it's going to go on the balance sheet. So let's close that out. Go back to the balance sheet by going to Reports. We'll type in balance sheet. Once again, balance sheet in Reports. We'll change the dates once again. 01/01/2/12, 01/31/21. Note we can get quit pretty fast at that, but January 1st, 2021 to January 31st, 2021. We're going to run that report. And then we're going to scroll down. It should be in the liabilities section, and we have the liability of California State Board of Equalization. That's who we owe sales tax to. So rather than just having sales tax payable, like we may imagine, there we have this item here. There is the amount. So if we drill down on that, then we've got it broken down in a few different subcategories. But if we click on one of these items here and scroll down, we'll see the sales tax calculation. Now let's close out of this and let's go back. So we're going to go back to the summary report. And then we're going to look for the other items. So it's going to be a decrease in the inventory and the related cost of goods sold. The inventory, a balance sheet account, cost of goods sold, an income statement account. So we're going to go to the balance sheet and we're looking for inventory. Here is inventory. We're going to select this 2,264 in inventory. And we're looking for this invoice item here. So here it is for Jones. There's 304, so 304 is decreasing inventory from 2,896 by 304 to 2,592. If we select that item, then we see the invoice, but we don't see that amount. We don't see that amount at all. What happened there? Remember that we're not going to put the cost of the item on the invoice because we're not going to give that to the customer. However, when we generate the invoice, that's what triggers the cost of inventory to decrease the amount of inventory reported. So in order to find that, if we get the right guitar this time, it's a GUSA. If we close out here and we go to the sales and we go to product and services and we scroll down and we find that, if we want to check where that came from, it's right here. This is the sales price and this is the cost, $304. So that's where that number is coming from. It's going to be on the invoice or generated with the invoice, although it's not going to be actually on the physical invoice. So we're going to go back now to the reports one more time, and we'll look at the profit and loss. Profit and loss. Going to the dates of 01/01/21 to 01/31/21, and we'll run that report. And then we got the cost of goods sold. That's going to be the other side. This is the expense related to us selling the guitar. So revenue went up, expenses went up. The difference is the effect on net income. If we select that item, then once again, we see the Jones guitar, the amount of $304, which is the cost, not the sales price. Selecting that item, we get back to the invoice, and here once again is the invoice.